markets here in Europe opening up for a brand new trading session. We had a terrific run Friday session in response to phase one of a trade deal between the US and China. A pop of about 2.8% on the DAX, a little bit less on the broader benchmark in Europe, but still very solid day playing out. Now as we move further throughout the trading session for Monday, you can see we're just coming off some of those higher levels. 2/10, 3/3% now trading down now in terms of the benchmark as investors digest what has transpired. Also a huge week on Brexit as we start to tick through all the different issues that investors have had with markets this year. Brexit is in this final stage now, this countdown towards the end of the month, with key talks taking place behind the scenes today, trying to convince European partners to reach a deal before European summit later this week. But still enormous uncertainties. And you can see some of this now coming back into the trading mix this morning. Let's just dive into the individual sectors and see if there's still a trade implication that we're seeing on the charts. And behind me, you can see just one sector trading in positive territory. So very much a reversal from what we had from the Friday session as investors pick up the trade this morning. Basic resources at the bottom, banks also drifting south, trading off about 1.2%. Don't forget there's also significant event risk around earnings season in the States this week. All eyes on that trade too. Oil and gas, weak patch this morning, trading in a negative territory. As you can see, the financials, telcos, all just drifting south at the start of this session. In terms of some of the other sectors we're watching for you closely, we've got the real estate sector, 0.5% south, so-called defences on this chart. A lot of moving pieces, as you can see behind me. Industrials, trade-related basket, just moving south by 0.4. Technology, we've had a lot of movement in some of the big semiconductors in the States, and some of those in the basket. AMS trading firmer this morning, just minimizing some of those losses. And also when it comes to the likes of household goods, luxury has been a trade to watch. Only a couple of patches of green in that basket this morning. So in fact, if anything, just a bit of give back around some of those big luxury names. The utilities trade and food and drink towards the top of the basket of stocks. And you can see that very much a defensive play. Let's get into the indices. We saw a decent trade for the FTSE Friday session this morning, 7224, trading weaker by about 1/3%. And across the board, losses for the SMI. That is the market weathering the most give back, trading down almost 0.7. The DAX is also drifting 0.4. So we are just seeing a little bit of risk off at the start of the Monday session. Well, quote, a very substantial phase one deal is how President Trump described Friday's tentative trade agreement between the United States and China, the first part of what's expected to be several phases of negotiations covering areas like agriculture, currency and intellectual property. The president also agreed to suspend raising tariffs to 30% on $250 billion worth of Chinese goods. Meantime, auto sales in China fell by a little over 5% in September, according to data from the country's biggest auto industry association. It is the 15th straight monthly decline. You can see stocks in the basket mostly weak, with the exception Fiat and Porsche. Jeff.
Terrific. Karen, thank you very much indeed for that. Ben Guttridge has joined us, Head of Fund Research at Brewin Dolphin. Ben, good morning to you.
Good morning to you.
Let's just get a view on how you feel about equities this morning, given that we've got a very indifferent open to the European start of trade.
Well, I think on balance we're feeling pretty positive about equities. No doubt the globe is enduring a bit of a slowdown here, but there are policymakers working very hard and have the flexibility to work hard in the absence of inflation to extend accommodative policy. You know, we're seeing a bit more positive noises on trade, but generally policymakers, I think, have enough and are trying hard enough to extend this economic cycle, which is better for equities.
Why have we not had a more positive start to the European session this morning, given that, one, we seem to have phase one, as President Trump's called it, of a trade deal, and two, the fact that they have been able to apparently reach some meeting of minds would imply that by the time Europe gets round to its negotiation, maybe there is a playbook here for how Europe and America can come to an agreement on a trade deal?
Well, I think there is a lot of short-term actors in markets around calendar events, and of course we had better news on trade. Markets react and now positively, and now there is quite rightly this sort of skeptics come in and trying to hammer out what detail is here. You know, obviously Trump's speaking very confidently about it. China's being a little more guarded with the detail, and of course it does seem to be more of a truce. Well, at best it's a truce rather than some grand bargain compromise. And so, it may not be long before tensions flare up again as you need to get to a final destination with this deal. This seems to be a sort of reprieve rather than a deal. So scepticism, I think, is sort of building after the initial optimism.
From a trading perspective, do you think it's also earnings season? We're on the cusp of earnings season in the States, and we were kicking off with the banks. We were expecting to see a little bit of weakness. On top of that, it's Brexit week. Effectively, we were all eyes on negotiations taking place in all the back channels.
Yeah, I thought it'd be a big ratings week for this show. Yeah, there's lots happening with Brexit, lots happening with trade, and as you point out, it's bank earnings season. A key concern of markets is what's happening with US growth. We know that the global economy is enduring a slowdown. There are some economic indicators that point to something of a slowing in US services. So, a disappointing earnings season, weighs on sentiment as far as the progress of the US economy. So, we want to see better earnings out of the US. We want to see positive noises on Brexit, on trade. But with all this going on, we're likely to endure a bit of volatility this week.
The message from Bill here has been just get on with it. This is a decent US stock market, and the millennials, as they come into their spending cycle, are going to help drive a lot of the value stocks higher here. You're also a bit of a fan of the US market right now with an overweight.
Yeah.
Walk us through your arguments for that overweight as against but the potential to buy a lot of European stocks at very beaten up valuations.
Yeah, I think you're right. The value investor is unlikely to find, a global value investor is unlikely to find too much in the way of opportunity in the US relative to Europe and emerging markets. I mean, we're of the view that equities are probably going to be the best asset class on a 12-month view, given, as I said, we think it's sort of a mid-cycle slowdown. Policymakers are not going to bring an end to this cycle, which means we avoid a recession and equities should perform the best. Actually, maybe it is the case that Europe and Asia deliver the best returns, but it's going to be sort of a checkered journey. There's going to be a volatility associated with that. There'll be down days based on scepticism about trade. There'll be down days on sort of scepticism about Brexit. And so to better weather the journey of volatility, we like the attraction and defensive nature of US equities.
Bill?
There was a chart the other day that I thought was very interesting. Compared to the last, I think, 30 or 40 years, in the United States, value is trading right now at about a 9% discount to the average, to where value has traded in those 30 or 40 years. And growth is at a 36% a premium to the average. So how might that weigh in for you in your research?
So, yeah, I mean, there is this band-aid that seems so stretched between the opportunity within the value parts of the market and growth. And if we think this is only a mid-cycle slowdown and that growth should stabilise, then those value businesses do offer some attraction. So on that basis, I think we would be leaning into value, but we're not going to put all our eggs in that basket, if you like, because it could be, there is precedent that our core view doesn't materialise and actually the cycle ends sooner than anticipated, in which case those value businesses are likely to stay cheap and probably get cheaper. But I think that the attraction of value on balance has some merit. We wouldn't want to push it too hard.
The challenge is reconciling this with the messages that are coming out of the bond markets at the moment. I mean, what was it, just last week, I think we saw Greek sovereign go negative yield here.
Yeah.
In what world can we have a strong cyclical pickup in the US and international economies as we see negative rates in sovereign debt around the world and people running for cover, if you look at the fund flow data, in fixed income?
Well, I mean, there is...
or if they got it all wrong, I mean...
that
there
negative...
is that potential.
I mean, that negative yielding narrative doesn't tell the whole truth in that, if you're a US investor, you can hedge that currency and actually these assets have a positive yield. So, but the broad message is that, central banks, armed with less potency, agreed but are still striving to make financial conditions as generous as possible for consumers and corporates that, is working to a degree. But you're right to extend some skepticism because, growth numbers aren't stellar by any stretch.
We considered that Greek thing last week ringing the bell big time. I mean, the same set of banks and government that virtually no one had any confidence in that were requiring dramatically higher rates than any rates in the world. In our opinion, that just shows you how ridiculous the momentum is in the bond market around the world. That is, it might not be 2 months or 6 months, but 5 years from now, people will look back and they'll say, how dumb could I have been to bought a 10 or 20-year instrument at these kind of rates? And everybody will go, why didn't they react to that ahead of time like they did before the financial crisis on mortgages? And when they saw how stupid people were being on that. And that's the beauty of the markets. The markets can stay insane longer. You can stay solvent, and that's the nature of them.
Does it tell some more of a story around liquidity in Greek bonds? I mean, I can't imagine that many people are trading Greek bonds at negative rates at this point.
Well,
in parts of some quarters of the market, right?
I mean, I guess, Draghi's tenure is nearly up. You've got Lagarde coming in, and, you would be hard-pressed to suggest that she would do anything other than sort of be status quo plus a little bit more. She's very much a Europhile, would be determined to do what she can to keep this project together. So, presumably that takes away some of the risk premium associated with peripheral assets.
Well, and as we've been talking, who is the primary beneficiary of the EU? It's Germany. Who was the primary beneficiary of the favorable trade circumstances coming out of World War II with the United States? Germany. It's like, from a U.S. perspective, watching Boris Johnson, he's just looking and saying, why should we be in an organization that's all built around favoring Germany at the expense of Greece, who couldn't drop their currency when they were hurting, or Italy when they were hurting and couldn't drop their currency? So here we are. And I don't think the rest of Europe has anything to worry about. It's Germany that's got something to worry about, because they're the ones that have had these artificially favorable terms for trade for the United States that went to the kindness of the United States not wanting to make the mistake after World War II that everyone made after World War I, right? So here we are. So I don't think anybody else in Europe needs to worry about it. It's the Germans that need to worry about it, because they're the ones that have the gravy train, and they're the ones that are the primary beneficiary of the European Union. And I think Boris Johnson recognizes that.
We'll come back to this in just a second. I just want to intercede for a moment here, because we've got some flashes that I think the audience will be interested in hearing. This read the energy price here. The Saudi energy minister says we should concentrate on the stability of the oil market, not on the price per se. That's a bit of an old sore from the Saudis. But of course, largely the market suspects that they are very focused on the energy price, given in particular the concerns about Aramco and that potential IPO at some point. And with that in mind, Russia's energy minister, Mr. Novak, says we are confident that Saudi Aramco will become investors in Russia's future LNG projects. So there's a little bit of you scratch my back and I'll scratch yours going on here. Novak says Russia is closely monitoring any slowdown in U.S. oil production growth here. Obviously, the issue for OPEC and non-OPEC, as it's been called, as the competition that they're getting out of the United States at the moment, particularly in volume terms. So the Saudi energy minister says that OPEC and OPEC plus countries are showing a high commitment to the current oil output deal. Just to give those to you. Bill, your characterization of Germany as the big winner from the EU. The Germans would turn around and say, we've run our budgets carefully as the Maastricht criteria requires us. We've come in sensibly under 3% of GDP. And in fact, they've managed to extend social spending in Germany without any notable increase in underlying debt since 2014. That's just good management. That's not something the US has achieved or any other developed Western economy. Mm-hmm. The Germans would just say, you know what, we've just been better at it than you guys.
No, I'm not talking about them relative to the United States. I'm talking about them relative to the. We're not in bed with them. We just buy their cars.
Yeah.
That's.
But you implied that the structure of the arrangement is one that favors the Germans.
Of course
the Germans
it does.
would argue that they've worked hard to get where they are today.
Well, but they would have worked hard. My dad's side of the family came from southern Germany and German-speaking Swiss folks, and I know that those kind of people. I'm one of those kind of people, and we like it cut and dried, and they like it cut and dried. The problem is their ability to flourish in the environment that's been set up is superior to the other players.
I mean, it's one of the big imbalances that actually Trump quite rightly addresses. Their success has, to a degree, been built upon global sort of leverage. They have.
Well, they sold cars to the rest of the world that the rest of the world wanted to buy.
Yes, but using leverage, and if the German economy could move towards more of a consumption-based approach, that would address some of these larger balances. What a great win for the European economy it would be if the German consumer could start spending a bit more. But of course, we don't expect that to happen overnight. That's a bit of a moonshot.
Who's going to make babies? I mean,
I've just had my third.
There you go. You're a fantastic. Who's going to make babies is going to be who determines the winners.
But on that basis, I mean, just circling back to the US here for a moment, the administration's policy of restricting immigration surely is doing some damage here to America's growth potential at this point. When we look at the tightness of the labor market.
Yeah.
I mean, back to your babies.
You know what? The thing I love about economics is everybody moaned about high unemployment rates for decades, and then we get to low unemployment rates, and everybody moans about low unemployment rates.
Right.
So the answer is that we're drawing a lot of people that given up on work and had given up on working back into the labor force. It's a very pleasant problem. Most of that immigration problem is you can't get enough technology workers from India and China and other places to come into your country. And, do you really want us fighting that game with the rest of the world, or do you want us to produce our own? And that's, I'd like to think that we'll produce more of our own in the process.
Ben, where would you take us outside of the US? Obviously, you have an overweight on the US equity market at the moment. What else are you comfortable owning?
Well, not a lot. We do run a relatively neutral position, but what I would say is that, just in relation to the previous comments, of course, it's recessionary risks are more apparent from a position of labour market strength. When you have labour market weakness, there's more people to go to work. So we do have this a US labour market in great shape, but actually that tightness does pose a threat to our core view. So what we would always stress is that whilst we like US equities, we're overweight, we still see government bonds, these very unappealing commercially yields that are available, actually still offering something of a hedge. That'd be our only other message. We'd be overweight equities and overweight the US, but let's not forget government bonds, because our core view might not materialise.
Okay, Ben, you're going to stay with us. We'll pick up with you in just a moment. And Bill, you're here for the duration, so we'll come back to you in a moment as well. Tune in later for a First On CNBC interview with the US Treasury Secretary Steven Mnuchin. That's at 1400 Central European Time.
And one story we're following for you, US private equity firm Thoma Brava has announced it will take cybersecurity company Sophos private in a deal worth $3.8 billion. The offer represents a 37% premium to the UK company's closing price on Friday. Sophos directors have recommended the deal to shareholders.
Coming up on the programme then, we need to talk a little bit about the outlook for trade. While the US and China apparently inked the first phase of a trade deal, tariff tensions are on the rise between Washington and Brussels. We'll take you live to WTO headquarters in Geneva in just a moment.
Right now on CNBC Make It. Think you've had tough...
1 in 10 Londoners surveyed said they'll give more to charity in the next 12 months. Are you one of them? At CAP, CAF, we help generous people like you support their favourite charities by making giving simple. And we provide charities with the tools they need to perform at their best. So together, we can make a bigger difference for our communities. We're a charity and a champion for better giving. We are CAF, and we make giving count. Visit cafonline.org to find out more.
You're in charge of hiring, and Indeed has solutions, like online skills tests, which let a candidate show that they are the right hire. And we give you this toy monkey, who will bang its cymbals when the right CV appears on your desktop. Okay, there is no monkey. There is no monkey. But there are online skills tests.
See why more than 250,000 companies in the UK use Indeed for hiring. Visit Indeed.com/try today to try skills tests for free today. Terms and conditions apply.
London, switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
When travelling from the centre of London to the heart of Edinburgh, what's best? A plane or an LNER train? Well, there's a massive queue at the airport, so 1-0 trains. Free Wi-Fi on board, 2-0. Actually, the airport's miles away, and you have to take your shoes off in security. Minus points for planes. So, it looks like an LNER train is the winner. Thanks for playing, planes. That's London to Edinburgh for 4 hours and 19 minutes. Book direct at lner.co.uk.
Can I have chemo at home?
It's only suitable for a couple of types of
cancer.
When you search one question about cancer, you end up with millions of results which contradict each other. For clear and uncomplicated information, come to Cancer Research UK. Visit us online or give us a call on 0808 800 40 40. Cancer Research UK. Together, we will beat cancer.
The Peugeot Professional Van range is the beating heart of businesses across the UK. Whether you're on the road with only your DAB radio for company or navigating tight spots with rear parking sensors, all Peugeot Professional Vans give your business that edge. Visit your local Peugeot dealership during our October van event from the 10th to the 31st of October and drive away with an exclusive finance offer. Master the impossible. Peugeot Motor Company PLC is acting as a credit broker, not a lender. Finance subject to status. Terms and conditions apply. Business users and over 18s only. Guarantee may be required. PSA Finance UK Limited.
Welcome back, everybody. So, a very important day here for the ongoing UK/Brexit story. We've got the Queen's speech as this government lays out its agenda, assuming that it manages to stay in power long enough to implement that agenda. And, of course, we've got a critical meeting this week in Brussels to work out whether there will be a deal before the end of this month. So what's the pound doing? What's the FTSE doing on this? Well, as you can see, we're a little bit weaker. That rally we've enjoyed on sterling appears to be dying on its legs. And the FTSE, in spite of the early calls suggesting we'd be higher, well, that's down about 0.25% right now. Ben, what about the opportunity for animal spirits to be unleashed here in the UK, assuming that we get a deal this week? Why would anybody want to sell the pound against the dollar?
Well, I mean, if we get a deal this week, I would agree. You know, those animal spirits will be unleashed and the FTSE and the pound will be off to the races. But I think, no doubt, you have some concern that may not play out. We have some concern that may not play out. I think there are a few more obstacles, some pretty clear obstacles, as to getting that deal done this week.
Fortune favours the brave.
Well, in this instance, that could be a very rewarding trade, but I think we need to take into account the hurdles that have prevailed and been an obstacle throughout this negotiation process. You know, ultimately, it doesn't seem as though the deal on the table looks as though it offers too much concession to the EU, and the Parliament are unlikely to side with it. So, you know, we don't see enough has changed for a deal to be thrashed out this week.
Ben, did we see a bit of market positioning reaction though? I mean, you know, Friday's session got to 127, for instance, and very, very quickly. So does that tell us something about how short investors are, that if there happened to be a deal, we could move very, very quickly to the upside from here?
Yeah, you're absolutely right. Positioning is all against UK assets, the pound, and the Brexit stocks, retail stocks in the UK. When we get positive noises surrounding a deal, those assets catch a break. When you get pretty clear signals or apparently clear signals, they rally even further. But again, I guess it's sort of, despite that there is that level of pent-up demand for UK assets and the shorters have to close out their positions, but will we get this deal this week? And we just have a cautious view on that, so can't get behind that very sensible strategy normally of betting against a big short position.
It might be Braxton Hicks, but Braxton Hicks comes relatively
really
close.
Got birth on the mind.
Exactly.
This morning.
Exactly. So you know what I'm saying? In other words,
so it will be born, but it's just a painful.
I've been coming here. Our company's 12 years old. We've been coming here for 9 or 10 years, and my dollars were going way farther on this trip than any trip that I've been on. And therefore, as an outsider looking, yes, it's very cheap. It's very attractive. Again, we run a U.S. large cap value fund, but I would be an optimist on what's going on here.
A quick message on that, what that means for the FTSE, because we've seen in parallel that they can actually trade higher together, sterling higher, FTSE higher when there's good news.
Yeah, I think that the starting position is pound weakness. Well, all those euros and Asian and emerging and dollars translate into more pounds. That's better news. But I think in this current climate, a Brexit deal would see a dual win. UK stocks attracting international investors just as the currency gains. So the vice versa, sadly, is true. So I think that relationship in the short term is more likely to be pound and the market moving together.
Bill, hold that thought. Yep. We'll come back to you in just a second. Yep. We're going to get rid of Ben, that's why. But
fair enough.
You're going to stay with us. So we've got an ejector button down here, and he's just up through the roof. Ben Guttridge, Head of Fund Research at Brewin Dolphin. Thanks so much for coming in, Ben. Good to see you. Very briefly, the World Trade Organization formally authorizes the United States to impose tariffs on EU imports over Airbus subsidies. This just breaking right now on the wires. I think it's just confirmation of a story that we already know the direction of here, but we'll pick up on that. Villain's got some more on the WTO. Somebody who knows a bit about Braxton Hicks. Steve, I think you've got 3.
Thank you very much indeed, Jeff. Just to say that I've just walked the perimeter of Parliament Square, and there are hundreds and hundreds of police awaiting the Queen, awaiting the household cavalry, awaiting potentially a lot of protesters. But the extraordinary situation is we're going to get a speech laying out the agenda for a government, for the next Parliament, for a government that may not last the next couple of weeks. Who knows what will happen here in Westminster? Well, we'll go through a few of the features after a very short break on Squawk Box.
You're in charge of hiring, and Indeed has solutions, like online skills tests, which let a candidate show that they are the right hire. And we give you this toy monkey, who will bang its cymbals when the right CV appears on your desktop. Okay, there is no monkey. There is no monkey. But there are online skills tests.
See why more than 250,000 companies in the UK use Indeed for hiring. Visit Indeed.com/try today to try skills tests for free today. Terms and conditions apply.
Get ready for Brexit on the 31st of October. Brexit will bring changes that affect businesses in many ways, particularly if you buy from EU suppliers, sell to EU customers, provide services to EU clients, and receive customer data from other businesses in the EU. Businesses need to prepare. Find out how at gov.uk/Brexit. Get ready for Brexit on the 31st of October.
London, switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
If you can drive a van that's built in Britain, with class-leading fuel economy on every run, to Middlesex to do some masonry, or to Tunbridge carrying well over a ton, yours is the all-new Vauxhall Vivaro. and you'll be driving a Great Brit van, my son. All new Vauxhall Vivaro carries British business. To find out more, search New Vauxhall Vivaro.
You don't just live in one room, so why should your Wi-Fi? With Sky Broadband's Wi-Fi guarantee, you'll get Wi-Fi in every room or money back. Perfect for food shopping in the bedroom, gaming in your PJs in the lounge, or streaming sci-fi movies in the kitchen. Get Sky's super-fast broadband and Wi-Fi guarantee. £32 a month for 18 months with $19.95 setup. Click on the banner now.
Sky Fibre errors, Sky Kit required. Refund on boost component of subscription paid during current minimum term up to date of claim. Minimum 3 megabits per second or money back. Prices may change during minimum term. See sky.com/guarantee.
You're a small business owner and there's nothing small about what you do. That's why Dell Small Business Technology Advisors give you trusted advice and tailored tech solutions like computers with Intel Core processors, servers, storage and networking, plus industry-leading monitors and software. No matter your technology needs, Dell is here to help your small business do big things. Call 0800 085 4878 to speak with an advisor today. That's 0800 085 4878.
Welcome back, everybody. The headlines this hour. The global rally losing steam this morning as Europe fails to pick up on the trade deal optimism in the closes that we saw on Friday. This, of course, after the US and China agreed a truce in the first phase of a trade agreement. The World Trade Organization giving the green light to the US to impose tariffs on EU imports over Airbus subsidies. Shares in UK house builders and banks among the biggest fallers this hour as the UK and EU say there's still work to be done to reach a Brexit deal ahead of a key summit this week. And the US pulls its last troops from northern Syria amid a growing offensive from Turkey, while President Trump threatens powerful sanctions on Ankara.
Here in Europe have been open for half an hour so far, and we are giving back a lot of Friday's territory. The reaction we had to phase one of a trade deal between the US and China, a pop of more than 2% on the benchmark here in Europe has given way to losses this morning of about 0.7%. But keep in mind, significant risk events for a lot of investors this week, particularly around Brexit. We are in that final stage now, so we see more negotiations take place behind the scenes, working out whether there's going to be a parliamentary session by the weekend and whether the European summit will agree anything that's been negotiated. So the investment community a little bit nervous around headline risk with Brexit. Don't forget also earnings season in the States now. That's another big focus as the banks kick off their reporting later on. So the market just nervous, as you can see, and it's run across the board. If you look at the stocks, just about every sector has been trading in the red at the start. There's about one patch of green. Actually, now that's even given way to red. And currently the top utilities are very much defensive play. Right at the bottom, basic resources, insurance stocks, banks, fairly decent percentage losses here, dragging the market south. And if you take a look at what we're seeing across by the stock level, a couple of patches of green around some single plays, likes of WPP, Bolloré, a bit of an advertising marketing bent on this market. To the downside, steel company ArcelorMittal, 4.4% south, and a couple of UK names also just trading a little bit weaker. Jeff.
Terrific. Karen, thank you very much indeed for that. Let's talk a little bit about the WTO announcement that we've just seen here then. Moments ago, the World Trade Organization gave the final go-ahead on billions of dollars of US tariffs. They target a broad range of EU goods in retaliation for subsidies given to French plane maker Airbus. I know Willem is particularly upset about the threat of further tariffs on Italian cheeses. Let's get out to him now in Geneva. Hopefully you'll be getting your fill now, Willem, before the price goes up.
Yeah, I certainly worry about my trip to New York later this year, Jeff, and facing slightly higher prices when it comes to my Parmesan on my Bolognese. Of course, this is about more than just that, though. The context here between the US and EU when it comes to trade is something a lot of economists have said they're concerned about. This could mean a new front in a trade war, just as the tensions between the US and China seem to be dissipating very, very slightly on the back of this agreement that the Trump administration seems to have struck over the course of the weekend. This adoption of the ruling today was a formality. This was all based on the fact that arbitrators earlier this month had said that $7.5 billion worth of European goods could face US countermeasures. They said that was appropriate given the decades of subsidies to Airbus from certain European governments. The US Trade Representative's Office making very clear at the time that they sought to impose these tariffs as soon as the end of this week. So now we see that they are legally enforceable. To talk about the slightly broader context and the impact that these tariffs and non-tariff measures have on global trade, I'm happy to say I'm joined this morning by Alessandro Nicita from the UN body that focuses on trade. And I wanted to ask you very broadly, what impact tariffs have on developed and developing economies, and what investors and businesses can expect if tensions continue?
Good morning and nice to be here. Yes, to answer your question, I think it's, we are in a very delicate moment. We have the US and China trade war, which is developing. The latest news is that actually there may be a truce. Actually, there is a truce which is going to last for a couple of months at least, and we'll see what happens next. And now we have this ruling from the WTO. We actually put more fuel on fire, and so we need to see what will be the reaction to this, especially on the EU perspective. I mean, if the US is going to really to put the tariff on Parmesan and all those things that you just mentioned, and to what extent the EU is going to retaliate, because if my main concern is actually that we can be in a phase which will be very easy to escalate, since we see the behavior or the stance of the U.S. administration in those kind of confrontations. So we really need to be attentive of what will be the next step from the EU side and then from the U.S. So in the broader context of your questions, that what are the implications for developing countries and developed countries, I think all this trade tension, trade war, whatever you want to call them, really put a brake on the global economy. And that's because they create a lot of uncertainties. When there are uncertainty, firms will not be willing to risk investment if they don't know exactly what is the stance of trade policy among countries. So foreign direct investments will be like, we already see them actually have been the decline a lot. So in this context, I think the latest estimates of the global growth in the next year or so will be even lower, or will be
so that's broad based though. Yeah. I want to ask you about this. Again and again and again over the last 15 months, people have said there are no winners in a trade war. It's lose-lose. But are there economies, based on the research you've done, let's say in the Asia-Pacific region, where they have seen benefits?
Well, when you see those kind of tariffs which are implemented on a bilateral basis, so they are just targeting one country, those kind of tariffs creates a lot of what we call trade diversion effect. So if the U.S. importer will not be able or find convenient to import from China or from the EU if tariffs are coming, then U.S. importers will find more efficient, more convenient to source the intermediate goods or the agricultural product or whatever they are importing, instead of from China, from other countries. And we actually are seeing that some countries, in the latest data, some countries actually have benefited. And among them, of course, you see like the closest economy to the U.S., such as Mexico and Canada, but also a lot of countries which are on the periphery of China, such as Vietnam, Taiwan, the province of China, and even India a little bit, but not as much, but mostly are those four I just mentioned.
Is it possible that you would have similar beneficiaries if there was to be an escalation of trade tariffs between the US and EU? Are there other countries around the EU's orbit that could benefit from this, do you think? Or is it going to help domestic producers in the United States?
Well, that's also the case. I mean, there is a big difference between the U.S. and China trade war vis-à-vis what could happen in the case of EU-US. I mean, things about EU, it's a very developed economy, so the kind of products it exports to the U.S. are very much very sophisticated. Who is going to, besides maybe even the case of Parmesan cheese, if I can. So, but who is going to replace them? There is not many countries there. Maybe the beneficiaries would be, to some extent, the very Japan or Korea, but will be a lot more difficult for the US to outsource from other countries, because EU it's very efficient and very specialized in high technology goods also. So
you focus as an economist at the trade division inside this UN agency on this issue very closely, and I'm just wondering, is this as unsettled a situation as you've seen in your career, with huge question marks about the future of the WTO as a dispute enforcement mechanism?
Well, I think from a trade economist point of view, this is a very exciting time. I mean, during most of my career, it was kind of boring, I would say. I mean, we didn't have there was the last big excitement was during the Uruguay round, the negotiation. There are little sparkles here and there. But now it's really a very exciting and tense period. There are a lot of things going on in terms of international trade, and there is really a question to what extent the WTO can support the multilateral trading system in the trade dimension. So in that sense, I think it's very important to defend and to support the WTO, because what we are seeing is that the WTO serve a very good purpose, I think, and the purpose is that it gives voice to developing countries in the multilateral trading system. So without the WTO, you will end up in a situation where the bilateral agreements and the balance of power between those bilateral agreements are very skewed towards or against low-income and poor countries, and this is not really what we should be looking for. So I think the WTO, at least for this kind of perspective, should be defended and should be reinforced in its mandate in doing this. So giving voice to weaker, poorer, and low-income countries.
Alessandro, we'll leave it there. Thank you so much for joining us this morning. That was Alessandro Nicita. He's an economist at the trade division at UNCTAD. And just to give a bit more context to what he was talking about in the future of the WTO, of course, the appellate body, the court of last resort, essentially here at the WTO, is currently down to 3 members. 2 of those members will be forced off in mid-December. And at that point, essentially, if a country, a member of the WTO, is unhappy with a future ruling against it, it can appeal, but without an appellate body, that appeal essentially will act as a veto, and this could mean that a lot of the European and Chinese complaints about US behavior the last 2 or 3 years will not be able to be resolved anytime soon, guys.
Willem, thank you very much for that. Let's move on. New reports suggest the US is considering adding Swiss pharmaceutical products to its list of tariffed European goods. That, according to media outlets in Switzerland over the weekend. The US is the second largest market for Swiss drug makers like Novartis and Roche. How are we doing on the back of this story? Well, as you can see, the market taking it on the chin this morning, and those stocks significantly underperforming the broader markets.
Meantime, the EU and UK have cautioned that much work still needs to be done as Brexit negotiations intensify ahead of a key summit in Brussels this week. The EU's chief Brexit negotiator updated diplomats on talks on Sunday, with the FT reporting ambassadors have been left confused by the UK's fresh customs proposals. Meanwhile, UK Prime Minister Boris Johnson's legislative agenda will be outlined today in a speech delivered by Queen Elizabeth. Let's get out to Steve in Westminster for more. Steve, a lot of pomp and ceremony today, but around the big picture as we count down to the end of the week, it could be a monumental one for investors around Brexit.
Yeah, I know we've been there before. We've had very, very big weeks, and we've had withdrawal agreement bills back and forth under the May Premiership. But I think this is an enormous week, especially when you look at the broader diary and what could happen. Let's just start off with, of course, we've got the Queen's speech today, then 4 or 5 days of debating. Hannah on our team pointed out to me, and I'm pointing out to you out there, that the last time a Queen's speech vote was lost was 1924, and that was a Stanley Baldwin government. And after he lost that, he stepped down and actually we saw a minority Labour government. So Boris Johnson, bit of a historian himself, will have a look at that historic period and think, goodness me, let's hope the same doesn't happen this time round as well. But then, of course, you've got intense negotiations going on between Westminster and Brussels at the same time, and then you've got this summit on the 17th and 18th, and then the 19th is the absolute key day. It's a Saturday. We should all be watching rugby and just relaxing as well, but there'd be a parliamentary session for the first time in decades. It could be a parliamentary session where they vote on an agreed withdrawal agreement bill with the European Union, or it could be a parliamentary session where Boris Johnson has the tail between his legs and has to send a letter to the EU asking for an extension, because the 19th is a day that is written in stone in the Benn Act. And of course, we've talked a lot about the Benn Act, which has basically forced upon this UK government the mandate to go and get an extension if they don't have an agreed deal with the EU by the time of the summit as well. So, and a crucial every single day. In the meantime, you've got this absolutely extraordinary event of this pomp and ceremony, the state opening of Parliament. It's been the longest Parliament, the one we just finished, pretty much ever, 839 days long. And we haven't had a Queen's speech and a ceremonial state opening of Parliament since 2016. We had a small version, a dressed-down version under Mrs May in 2017 as well. But this is the real thing as well. You've got everything here on the streets of London. It could be an amazing cocktail today. You've got the household cavalry, over 100 mounted cavalry as the Queen's official escort, going down the Mall, the full pomp and ceremony, Union Jacks galore, and then you've got the arrival here, the robing ceremony, the whole black rod knocking at the door situation, and the Queen giving out this speech. Now, this speech is basically the next Parliament's agenda of this government. Now, Jeremy Corbyn's called it absolutely ludicrous. He's called it a stunt, and he said basically it's a party manifesto dictated from the steps of a throne, basically the government giving this to the Queen. And it's hard to argue in many ways that it's not a manifesto, because a lot of these 22 bills that we are going to be hearing about, things like National Health Service, rail, justice, crime, immigration, all these issues are issues that came up, and our viewers remember this, at the Tory party conference a couple of weeks ago. So this is the manifesto for the next Parliament, or is it, and this is the key, the manifesto for the next general election? Because let's face it, we all believe we have a general election coming. The only question is, will it be a general election with an agreed deal from this government with the EU, or will it be a general election under the cloud of another extension and no deal Brexit? Lots of questions still remaining. But in the meantime, we love a bit of pomp and ceremony, and we've got it all on the streets of London today.
Steve, thank you very much for setting the scene. I think your Twitter feed might be the one to watch later on today. Meantime, coming up on the show, Russian President Vladimir Putin travels to Saudi Arabia as he looks to ease tensions in the Gulf region. We'll have more live from Riyadh right after the break.
Now get greedy whenever you want.
Get ready for Brexit on the 31st of October. If you buy items from EU suppliers or sell to EU customers, there'll be new requirements affecting businesses of all sizes. You'll need an EORI trader number and know how to make a customs declaration. You'll also need to make sure you have the right supporting documents for the goods you buy and sell. Find out more about how to prepare. Follow the step-by-step guide at gov.uk/Brexit-traders.
London, switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
Here at LNER, we love giving you more value. And we all love more, don't we? More sleep, more sun, more me time. So we've added our new Azuma trains with more seats and more great value fares. In fact, there are 3,773 more £29 single tickets every week on our Azuma trains between London and Leeds. Brilliant. Book direct at lner.co.uk, launching alongside existing LNER trains.
The chance of being hurt while using a leaf blower is about 3,000 to 1. Oh, unlucky. Never mind, at Currys PC World, there's a 1 in 10 chance to get half your money back on all 2019 LG OLED TVs. Like the LG C9, described by Which as simply the best. Get blown away with Apple AirPlay, Google Assistant and Amazon Alexa built in. And there's up to £500 off. So the question is, are you feeling lucky? At Currys PC World. T's and C's apply. GB16 plus. See currys.co.uk.
You're 169 in the queue.
I proposed on the 169. She got offered the next stop.
You're my 169th greatest lover.
The number 169 never screamed going places until now. Get the Toyota Aygo X-Play for only £169 deposit, then £169 a month with 0% APR representative. Just go. Aygo.
0% APR representative on new sales of Aygo X-Play over 48 months. £169 per month. Customer deposit of £169 when proposed and approved via Access Toyota by 31st of October 2019. £3,487 and 50p optional final payment. Subject to status to over 18s. Indemnities may be required. Conditions apply. Toyota Financial Services.
Russian President Vladimir Putin says he can help to soothe tensions in the Gulf region ahead of this planned trip to Saudi Arabia this week. Putin, who is set to meet with Saudi leaders, including Crown Prince Mohammed bin Salman, says he has strong ties with Gulf states and Iran. Elsewhere, Russia's energy minister Alexander Novak says he is confident Saudi Aramco will become an investor in future Russian LNG projects. Let's get out to Hadley in Riyadh. And Hadley, there's a lot of Russian companies already ahead of the game here trying to lock up deals in Saudi. What kind of reception will Putin then get?
Well, the Russian president certainly getting the red carpet rolled out for him in Saudi Arabia today, and expected to have the same happening in Abu Dhabi tomorrow. And of course, we're going to bring all of that to you live. Now, what's interesting, of course, about all of this is that it's not just about economic diplomacy, is it? It's also about creating stability in the energy markets. It's about taking advantage of the dialogue that really started back in 2015 when you had that initial investment by Saudi Arabia's Crown Prince of some $10 billion. Already $2.5 billion of that has been deployed. I'm speaking to the CEO of the Russia Direct Investment Fund, Kirill Dmitriev. He was telling me, and you'll remember, of course, that Kirill, this has really been his sort of brainchild that we've seen this deal over the last 4 years growing and blossoming, these conversations continuing. As you mentioned, Jeff, they have the biggest number ever of Russian businessmen visiting the kingdom over the next day or so. There are going to be several cultural activities. They have a Kandinsky exhibit as well as an AI exhibit. A lot of things that we got the behind-the-scenes tour on. But it was really interesting to look at this not just from the historical perspective, but also from the perspective of where in the world has the U.S. gone? Listen in.
We are not talking about, the strategic partnerships that Saudi has with the U.S. And what we are doing is not against the U.S. It's actually building something that is very positive and building something that helps Saudi economy, Russian economy, and builds a friendship between our nations.
So you don't consider this filling a void that the United States has left?
No, I think it's very important to be builders, and this is what we've done with our Saudi partners, and also having major respect. We respect initiatives of Crown Prince Mohammed bin Salman, that he allowed many new reforms, bringing tourism, bringing other things. So it comes from our deep respect of what's happening in Saudi Arabia, our appreciation of his reforms, and an opportunity that we believe is there for us to invest in Saudi Arabia and for Saudi Arabia to invest in Russia.
Back in 2015, as you say, there were a lot of raised eyebrows and naysayers about the potential for Russia and Saudi Arabia, Russia and the UAE to work together. You really led that charge to make all of this happen. How did that happen for you?
Well, I still remember one of the articles I actually showed to Khalid Al-Faleh, who is a former Minister of Energy in Saudi Arabia, and the article said Russian-Saudi cooperation in oil is a hogwash. And I actually said, Khalid, we need to prove it wrong.
Economic diplomacy, energy diplomacy, real politics, really just opening the doors to the conversation about what happens next in this region. And for Saudi Arabia and Russia, at least, looking eastward seems to be certainly easier than trying to address the problems closer to home, particularly in Syria, and the conversation that is ongoing surrounding what in the world these Gulf countries are going to do about Iran. Guys?
Brilliant. Thank you very much indeed, Hadley, for that. Let's just bring you some snaps from the wires here from Mr. De Guindos over at the European Central Bank. Latest developments regarding US-China trade deal are good news, he says. Low profitability among banks in the Eurozone is among the main vulnerabilities for the Eurozone economy. He doesn't think we're going to have a recession in the Eurozone, which is good news, but it's just his opinion at this point. Obviously, we will wait and watch and see how that goes. Bill, let's come back to you. You've been a bit of a cheerleader this morning, encouraging us to go back into US markets, believing that the millennials are coming into a big spending phase at this point. There are millennials all around the world. Why do we back the US millennial spending and not other parts of the world at this point?
Yeah, any country that they're a substantial part of the composition of the population has that same kind of tailwind. And by the way, do not confuse our enthusiasm about what they'll mean to the composition of spending and stock market performance over the next 10 years to saying that we think the entire United States stock market looks attractive. One of the reasons why Europe has and Britain have underperformed the United States is the FANG companies weren't in their country in the same way the dot-com companies weren't in their country in 98 and 99. So in an environment where glam growth and glam tech drives the market, the United States is likely to outperform the other parts of the world.
That ran too far. I mean, you had a very strong criticism of the level of access the German companies have had to the world economy. One could argue the same when it comes to the access for the FANG stocks. There's been no competition, no regulators standing in the way, and that seems to be changing now. So would you be a little bit cautious around the pushback and also the competition coming to the fore from other players, from Europe and China?
Yeah, we argue that there will be a Teddy Roosevelt, and that those reach their height of popularity, and the combination of regulation or trust busting, as it was called back then, will, and that's because people have been the frogs in the boiling water before it got hot. It's like, okay, I got free social media from these people. I got free delivery from Amazon. I got free search from Google. Therefore, I will trade $200 worth of search, or $200 worth of social media, or $200 worth of free deliveries for $6,000 of my privacy being ripped away each year.
We got to wrap it up.
Okay.
Pleasure having you in.
Thanks
so much for coming to us.
Yeah,
Bill Smead joining us this morning from Speed Capital Management. That's Squawk Box, everybody. Street Science coming up in just a moment. Thanks for tuning in this morning. We'll see you again tomorrow, same time, to do it all over again. Bye-bye.
A lot of people treat their finances like their health, and for some reason they don't want to.
At the Bank of Santander, mortgages are on the menu.
I was in the chippy last night, and it hit me.
Go on.
We should give all our new mortgage customers £1,000 of spuds.
Potatoes?
Yeah, jackets, roasties, dauphinoise. I mean, what's not to love?
Hey, yeah, we could call it Mashback.
Genius.
Meanwhile, at Santander, they're giving their customers £1,000 cash back on selected first-time buyer mortgages. See what's possible at Santander.
Lending subject to status and criteria. Cashback given on completion and repayable if mortgage closed within 2 years. Offer can be withdrawn. Your home may be repossessed if you do not keep up repayments on your mortgage.
Get ready for Brexit on the 31st of October. Brexit will bring changes that affect businesses in many ways, particularly if you buy from EU suppliers, sell to EU customers, provide services to EU clients, and receive customer data from other businesses in the EU. Businesses need to prepare. Find out how at gov.uk/Brexit. Get ready for Brexit on the 31st of October.
You're in charge of hiring, and Indeed has solutions, like online skills tests, which let a candidate show that they are the right hire. And we give you this toy monkey, who will bang its cymbals when the right CV appears on your desktop. Okay, there is no monkey. There is no monkey. But there are online skills tests.
See why more than 250,000 companies in the UK use Indeed for hiring. Visit Indeed.com/try today to try skills tests for free today. Terms and conditions apply.
So it's not fair. Self-service checkouts. Let's forget the fact you're now working on a supermarket checkout. As soon as you put anything past the scanner and placed it down on that bagging area, you literally just nudge. Literally, a blueberry falls out the bag. And it's going, thanks to get assistance. You need assistance. And now you've got to wait there for hours because everyone else is moving things. It's just not fair.
If you want fair, you want fibre broadband from TalkTalk. Search TalkTalk Fibre. Fairer broadband for everyone.
Fly with Cathay Pacific to over 70 destinations across Asia and Australia and move beyond the familiar. State-of-the-art cabins, world-class entertainment, and award-winning service, making sure you arrive ready to make the most of whatever lies ahead. Whether it's the stunning coastlines of Sydney, the secluded waterfalls of Bali, or the baroque splendor of Manila, book now at cathaypacific.com. Cathay Pacific. Move beyond.
Hearing is an underrated miracle. Intimate whispers, the lushness of symphonies, the soothing patter of rain on leaves. If you had that taken away from you, it would be a massive loss for most of us. Almost all of us go every day without really stopping to think about just how important it is to us.
Audible presents The Body, a guide for occupants, written and read by Bill Bryson, including original bonus material exclusively available at Audible. Listen free as part of your 30-day trial, $7.99 a month after 30 days, renews automatically.
Look at that. A riveting quest. A glorious opportunity. A scratch card. Yet he remains unfazed by the challenge, wavering at nothing.
Miss, please keep it down. We're in the quiet area.
Sorry. Here we are. The moment of truth as he reaches the end of...
Instant excitement with scratch cards from the National Lottery. Amazing starts here. Search Dream Big, Play Small. Rules and procedures apply. Players must be 16 or over.
Good morning and welcome to Street Science. I'm Jemana Versace.
And I'm Juliana Tattlebaum. These are your headlines.
The global rally loses steam as Europe fails to pick up on the trade deal optimism after the US and China agree a truce and the first phase of an agreement.
The World Trade Organization gives the green light to the US to impose tariffs on EU imports over Airbus subsidies.
Shares in UK house builders and banks amongst the biggest fallers in the FTSE 100 as both the EU and the UK say a lot of work needs to be done to get a Brexit deal ahead of a key EU summit at the end of this week.
And the US pulls its last troops from northern Syria amid a growing offensive from Turkey, while President Trump threatens powerful sanctions on Ankara. Well, our top story this morning, and the top story for markets, a very substantial Phase 1 deal, is how President Trump described Friday's tentative trade agreement between the United States and China. Now, the first part of what's expected to be several phases of negotiations covers areas like agriculture, currency, and intellectual property. The president also agreed to suspend raising tariffs to 30% on $250 billion worth of Chinese goods.
While both sides agree progress has been made, the pact is yet to be officially written and could take weeks to finalize. Now, President Trump praised China following the agreement and said the deal is fair for both sides.
We've been through a very tough negotiation. There's never been a negotiation like this. In all fairness, I give China tremendous credit because for 25 or 30 years, they've done very well with the U.S., and now we're doing something jointly. We're doing it in a fair manner. I give China credit for what they've done over the last 30 years. Tremendous credit. I don't blame China. I blame the people representing our country. Now we have a deal that I think ultimately is going to be just fantastic for China and fantastic for the United States.
All right, well, let's take a look at how European markets are faring this morning. And as you can see, Juliana, right behind Juliana, the full board is actually trading deeply in negative territory. And this is somewhat surprising, you would think, after this trade deal, or Phase 1 of trade deal, as President Trump called it. You would think that there would be a lot more optimism in European markets, but not so much the case. Also worth bearing in mind that on Friday, we did see a very, very strong close. Stock 600 up more than 2.5%. The DAX up 2.8% on Friday. So paring back some of those gains from the Friday session, you can see that across the board, the four of them are trading in negative territory, perhaps because the deal wasn't as all-encompassing as they wanted it to be. And we also had that very weak China trade data overnight as well. FTSE 100, just want to quickly draw your attention there. That index is down 0.4 percentage point. Big week coming up for the UK, and all eyes on the Queen's speech coming up in just a few hours' time as well. So that is the context for European markets this morning. Very negative. But let's talk more about the actual deal itself, the nuts and bolts. Eunice filed this report from Beijing.
President Trump said that the deal is one of the U.S.'s biggest with China, so big that it has to be handled in phases. The Chinese, though, are not as exuberant, referring to the outcome of the trade talks not as a deal, but as substantial progress. Beijing would see the results as progress. A tariff hike set for tomorrow on $250 billion worth of Chinese goods has been put on hold, one of Beijing's top demands. Discussion about Chinese tech giant Huawei will be held separately. And China's efforts to delay talking about trickier structural issues seem to have paid off. China will buy up to $50 billion of U.S. agricultural products. President Trump praised what he described as the start of a U.S.-China love fest.
Phase 2 will start negotiations almost immediately after we've concluded Phase 1 and papered it. And I think Phase 1 should happen pretty quickly. So you have intellectual property. We have an agreement on intellectual property. Financial services, the banks and all of the financial services companies will be very, very happy with what we've been able to get.
The goal now is to hammer out the text for the two presidents to sign by the APEC summit in mid-November. Official media here, though, are cautious. State paper, the China Daily, says the champagne should probably be kept on ice, at least until the two presidents put pen to paper, as based on its past practice, there's always a possibility that Washington may decide to cancel. The U.S. has accused China of backtracking on its pledges in the past, showing how low the trust is between these two countries, despite their new loving relationship. Eunice Yoon, CNBC Business News, Beijing.
Let's take a look at where things stand in terms of markets. The worst performing sector this morning is basic resources. Now, you just heard the details from Eunice on the latest when it comes to U.S.-China trade. Basic resources investors not only digesting that, but also digesting a number of fairly downbeat data points out of China overnight. One in particular to highlight the September exports number. Exports fell 3.2% year on year. That was the biggest fall since February. So some weakness driving the basic resources sector lower today. Moving on, let's take a look at autos, which of course another